I had clients 3 months ago that were looking to buy 2 months ago. I had them a 3.89 rate fixed, and they didn't want to take it because they thought rates were going to come down and so on and so forth. So they didn't lock in. And then when everything happened overseas, I literally reached out to them. I said, I know you're considering multiple offers, but lock in something because rates are going to go up substantially. And now we're looking at rates that are, almost 0.5% higher.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm a Level 2 mortgage agent. I'm joined as always by David Warren, Level 2 mortgage agent and owner at Referral Mortgages. And we are joined today by an amazing guest. We've been talking about it for a couple weeks now, and we'll bring him on in just 2 seconds. We want to say thank you to you for listening. Make sure to subscribe and make sure to reach out to Dave and I. We're in renewal season. Rates are all over the place. The world is amok. Reach out to us. We'll help make it a little easier for you, and we'll help you through the process. Our contact information is in the description. And thank you to our amazing sponsors. David, how are you doing? Sorry to steal the intro there.
All good. I'm a little half asleep. Got back in Ottawa at 2 a.m. tonight or this morning, whatever you want to call it. So a little short on sleep, but all is good. Back in the office, which is more familiar.
You look bright-eyed and bushy-tailed, Dave.
Yeah, it's amazing what 3 coffees already can do in a matter of an hour.
Yeah, I'm on the Intensios with the Nespresso. So that's their ultimate. So it's as close to an Americano as I'm going to get here from my home machine. Let's bring in Shaun Cathcart, Dave. He is the senior economist at CREA, which is the Canadian Real Estate Association. Shaun, how are you? Welcome.
Thanks. Hi, Paul. Hi, Dave. How's it going?
Doing well.
It's going really well. We were lucky enough to meet Shaun, see Shaun speak actually at the Ottawa Symposium, the Mortgage Professionals Canada Symposium that we had here in Ottawa a couple weeks ago. I came back on after that and gave what I thought was a really good summary of your presentation, Shaun, but I think I really butchered it. So now that you're here, I figured, and Dave's back too, so I'm not doing a solo show. We thought it'd be really valuable for our listeners to kind of hear directly from yourself, who has probably the most insight in the market as far as, metrics, stats, things that we don't even have access to, and being able to kind of shed some light on where the market is and what's happening. So how are you doing, Shaun?
The world's turned upside down. The world's also turned upside down since your last presentation. So,
that's true.
We were on a downward trajectory of rates. We were on what we thought would be a little bit of a momentum going into spring in Ottawa. But the last few weeks, things have been really shaken up. So maybe we can kind of start there. What are you seeing right now in this last few weeks, with regards to the market, how the bond market and rates have been affected with this?
Sure.
With this
Well, I'll tell a quick story first. So we've started this annual tradition where we do a sort of a forecast event from the Parliamentary Press Gallery. I actually did a rate the day before that Ottawa event. And you book space there and you just go, it's all wood and flags and you say your thing and you take some questions. So we started that in 2025. It was January 15th. I went up and I said, I'm going to give you our forecast, but normally you do the risks last. I said, I'm going to bring one risk forward and say it right away. If the Trump administration comes in 5 days from now and announces 25% blanket tariffs, everything else I'm about to say is out the window. And so we did it again this year, and I got up there and I said, here's our forecast. We don't know what this Black Swan event is going to be this year, but it feels like it might be something. And sure enough, we're at that point now where I don't think it's completely derailed our forecast just yet. I'm not an expert in these things. I would just look at what the Bank of Canada said last week when they had their announcement. They said, everything is highly uncertain right now. But what they did say was, hey, if this goes on, so the keyword being duration, right? You can have aberrant data points, but it's really if they stay super low or they stay super high, that it causes problems. If they just flash up and down, then that can create a headline, but it's not a long-term damage. So with respect to the price of oil, it's definitely going to show up in the inflation numbers next month, for sure. The question is it going to show up even more in the inflation numbers going forward as oil seeps into the price of everything else? Right now, we're fortunate that this has been going on not even a month yet. So I think everyone's crossing their fingers for a quick ending to it. But if it goes on, mortgage rates are going to go up. In fact, we have a file that we get from our friend, Rob McLister, you probably know, where we show deep discounted mortgage rates. And I had that file last week. It was 12 days old and it was still stale already. And so I called him up and I said, hey, are fixed mortgage rates moving at all? Because I know that bond markets are predicting the Bank of Canada is maybe going to now do a hike possibly in the fall as a result of what's going on in the Middle East. And that could get pulled for even more if it goes on. And he said, you know what? They actually did move a little tiny bit, like 5 basis points. So from, you guys would know this better than I, but like sort of like 399 it was at for a long time. And then now it's like 4.04. So unfortunately not 3 point something anymore. And I think that that's a critical milestone potentially for first time buyers who've been waiting for the bottom. We've been at the bottom for a year now. And now all of a sudden, right at the point when we think they're going to start to come back in, rates are going to start to go. I don't know if that could bring some people off the sidelines sooner. It's like, oh, we better go lock in now. But that's where things are right now. Highly uncertain. The keyword being duration. How long does this go on for? Because in the Bank of Canada, they were saying in their announcement, it's a situation where we're dealing with low or no growth and inflation. Webster's dictionary defines stagflation as without saying the word. But I think by the next announcement, if this is still going on, I think that word's going to enter the conversation.
Yeah, we actually saw, I wish we had rates at 404 right now across the board. Even last night, a predominant portion of the banks raised their rates by another 15 and 20 basis points. And we're now for an insured mortgage, so under 20% down, in and around the 429, 439 for a lot of them, where to your point, they were predominantly in the 394, 399. And some others, further discounted. But that's a huge, we're seeing the bond market having shot up this past week and a half. And I just got notice of one of the major banks increasing tomorrow as well. What that number is going to be is not sure yet. But, to your point, I think it's going to derail, I think, a lot of those buyers coming off the sidelines.
Yeah, we've kind of been talking about this for probably 18 months, that there's so many home buyers sitting on the sidelines, kind of with this anticipation that it's just going to keep dropping, like waiting for the bottom, but expecting rates to kind of get back to pandemic levels where they're like, oh, well, when are we going to see 2% again? Kind of saying it in jest, but also thinking that it might get somewhere close, and we've been having to kind of explain to them, like, look, anything with a 3 in the beginning is super strong. And anyone who had a renewal, like I had clients 3 months ago that were looking to buy 2 months ago, I had them a 389 rate fixed, and they didn't want to take it because they thought rates were going to come down and so on and so forth. So they didn't lock in. And then when everything happened overseas, I literally reached out to them. I said, I know you're considering multiple offers, but lock in something. Like, just take something, because rates are going to go up substantially. And now we're looking at rates that are, almost 0.5% higher. It's been a common conversation we've been having to have. Like, look, these are historically excellent rates. Like, even now at 429, like, that's not a bad rate. It's just people have this kind of unrealistic expectation, I guess, of where rates should be, because maybe they bought their first home in 2021 or 2022 when rates were at pretty much all-time lows. Money was essentially free. And now they're renewing into this environment where they're getting the headlines that rates are increasing, the sky's falling, Bank of Canada might increase rates, and there's a lot of uncertainty, as you said, Shaun. So I think the headlines don't help. Yesterday, Trump ended the war for the 10th time, and now we're back again, and there was bombings overnight. So, like, nobody knows when this is going to end. Everyone, as you said, Shaun, is hoping it ends quickly, because it's increasing the cost of everything, which was already dramatically increased and inflated. So, like, what I guess you mentioned, and we talked about this last week before all this, that even 6 months from now, the Bank of Canada is a 50-50 as to what they're going to do. So from your seat, having more data than we do, like, what is, or can anyone predict what's going to happen in 6 months? Like, where do things stand over the next 3 to 6 months?
No, they can't.
Perfect.
So it's just a matter of, like, I'll make a prediction right now. I think the Bank of Canada is going to go back to next NPR, which I think is the next announcement, are going to go back to not forecasting again for the third time since the beginning of COVID, and say, you know what, like, it's false precision. We give you a number, we can give you scenarios. The problem right now with what's going on overseas is the best case scenario is that it's as bad as it is now, and then somehow goes away tomorrow morning. The other scenarios are worse. There's no upside. And so, we already had a quarter of negative growth on the books in Canada for the fourth quarter. If we get another one, that's a technical recession with inflation going up. So there's your stagflation right there. It's not good for anything. It's certainly not good for our forecast for the housing market, which will be downgraded for sure already when we do it next month. I don't know by how much. I'm sticking to my forecast for now that first-time buyers will come back. It's unfortunate. There's a bit of a mismatch of the spring market when all the good listings are going to be available for them in April, May, June. and mortgage rates peaking or the bottoming out, like you said, a week ago. But for first-time buyers, that's been our thesis all along, is they're going to be disproportionately represented because they've been waiting forever. They all still want to become homeowners. And so if you're going to, you can't wait around for 2021 to come back. You're living in the cycle that you're in. And those rates that we had for 15 years leading up to COVID are maybe gone forever. Maybe not, but there's no indication those are, if you're going to wait around, you might be 42 by the time you end up buying your first home if you're waiting for that. So I think a lot of them are going to have to take what's on offer and do what they can. And for move-up buyers, like I might be, if my ideal house came up, which I'm not even sure it exists, I might look at that and say, well, let's say it's going to take an extra 200 or $250,000 to get that extra bedroom or that other bigger house or that different neighborhood at this stage of my life. At 4 point something percent, I'm like, I don't know about that. I've been used to 2 point something and 3 point something. Maybe I'll just stay where I am. But if you're first time, if you want to get out of the rental space and own it someday, then you got to just, you got to eventually make a move in the situation that you have. I think rates are still about as low as they're going to be in this cycle, particularly given what's going on overseas. Now, there's another scenario where further out, the economy is so weakened and, inflation in consumer prices is one thing, but a part of that is people have to be paying them. And if you have consumers that aren't spending money in a massively weak economy, then the Bank of Canada is going to have to weigh that. Their primary mandate's inflation. And they might be a little bit skittish also to say like, let's let it run hot because that didn't go so well last time. But they also have an update to their mandate this year where they said they're going to, my understanding is going to add a layer of sophistication to it so that the next time there is, some foreign externality affecting inflation, they don't find the solution by smashing Canadian mortgage holders over the head with a sledgehammer.
Yeah, that's the hope, is that they don't play the wait, and then it's too late game like they did with raising rates and instead of just kind of actually looking at the metrics ahead of time for the Bank of Canada. I think the stats that I saw from Rob McClister were, and the market pricing in is that of, they had priced in a drop by the end of the year, and that's been completely eliminated. And I believe it's flipped the other way, if I'm not mistaken, on the probabilities of actually an increase due to inflation from where oil prices are at. You said that kind of in your January 15th, I think it was, presentation, and we mentioned a black swan event, which is obviously what we're going through now. What was kind of your Korea's kind of forecast based on a black swan event for the kind of market, either whether it be locally in Ottawa or whether it's abroad, kind of prediction? What was it like?
Let me just say our forecast before that, but notwithstanding a black swan event. Our forecast was you've got first-time buyers that have been kept out of the market for 4 years at this point, where when mortgage rates were 5 and 6%, was just you couldn't pass the stress test on like even a basic starter home, right? It's now become attainable, if not affordable again. And I think a lot of people are going to say, this is our chance. The 25 to 45 demographic all across Canada is the biggest demographic we've ever seen. So for a long time, as those younger baby boomers were like on the podium for, they were the most important group. They're just in second at this point. And so, the numbers are all there. We went out in the field with major polling over indexing on the 25 to sort of 45 group last year, because there was some sort of hints from some maybe policymakers and others that maybe these people don't want to own homes anymore. So we went out and asked them, and sure enough, 75, 80%, yeah, of course I still want to be a homeowner. So the propensity is there. The problem is their homeownership rate has gone from 15 years ago, around 60%, to 5 years ago, 50%. And it's now guaranteed, I guarantee you, in the 40s. So under half for people all the way up to age 40. So it's falling off a cliff. We already knew that. I'm sure it's gotten worse between 2021, which was when everyone bought houses and interest rates were the cheapest ever. And now, when they've all been locked out, it's census data. So they're going to do the census this year. We get the data next year. We're going to try to lobby for that to come out first, because last time it came out way in the fall of the next year. It's like, can we get that first early? But I think that the homeownership rate amongst that group is falling off a cliff, but this is an opportunity right now for them to jump back in. And then the question is, what is there for them to buy? Tiny condo is too small, detached home. We can get into that. We still have a lot of starter houses out there, but they don't sit on starter lots, that's for sure, anymore. And so, this missing middle that the term was coined 16 years ago, we might want to start building some of that because we haven't.
Yeah, I think that was interesting in your presentation that you did at MPC was to that the first time home buyers and how quickly, right now there's an oversupply, when you look at days on market or you look at listings available in a lot of these markets. We'll talk to Ottawa specifically, just because obviously Toronto, their pricing's falling off a cliff. And to your point, not a lot of people are wanting to live in those shoebox condos right now, and they're kind of holding off. But even in Ottawa, having the listings that we do, the days on market, which have dropped significantly, but there's reasons for that. If pulling it off market, putting back on market can adjust that. But that first time homebuyer segment can really eat up that supply very quickly because there's no. I think you used the term like there's no. They're not replacing a property. They're fresh in the market, as opposed to somebody moving up, like you were kind of alluding to before, of you finding your next home, that your home's going back on the market. You're absorbing another one, but there's still kind of balancing out. Whereas in first time home buyers, net new to the market, absorbing product, which then it can eliminate that supply pretty quickly. Maybe you can kind of touch on that a little bit, because I know kind of you went into that with regards to kind of what's being built right now, that missing middle, like you said, of what first time home buyers are looking for, but how quickly that can be absorbed.
Yeah, sure. So yeah, it's exactly true. Right? First time buyers, whether that's somebody who just comes of age and forms a household and says, I'm buying my first home, or whether it's somebody that comes from, say, another country, or you move from one city to another. When you show up in a new place and you don't have a unit to contribute into the market, you're just absorbing one. When that's disproportionate, it draws down inventory very quickly. I'll give you a perfect example of where we've seen that in extreme cases in the past. So transitioning out of 2014 and into 2015, we had a major oil price crash, and it was petrodollar was out the window. And all of that migration in Canada that had been going to Alberta almost exclusively, where you get paid $250,000 to drive a truck, all flowed out like all at the same time. And it all initially went to the Lower Mainland and the GTA. Do you remember what happened in the markets in the Lower Mainland in 2015 and the GTA in 2015? Their inventories just got drawn down to nothing almost overnight. And it was just multiple offers, and the governments had to come and step in and like sort of tell them, knock it off, and scare everyone back to the sidelines. That's a perfect example of a ton of first time home buyer, because you might have sold something in Alberta where listings were through the roof, but you're a first time buyer in Vancouver. And so that could happen in a sort of a more, that's the geographic version. In recent years, we've seen also the international immigration version of that being very strong. I think this is the more organic first time buyers just coming of age where you're going to buy that first home. But there's so many of them out there. To your point, Paul, it's hard. The only way to measure them right now is to go out and do polling, because they're not active in the data set, right? I think they will be. I think that we first saw that starting up when rates first came down into the low fours in the fall of 2024. And we thought, okay, well, this forecast is going to come true in 2025. And then tariffs, right, which sort of wiped out the beginning of the year. Now, there was a good rally in the market through the second half of last year, right? Prices stabilized, sales were up, like in Toronto, something like 37% from their lows. So it was coming back. And then it sort of weakened off a little bit in December. And then the national numbers look disproportionately bad in January and February. And I'll double and triple down on this, because I know some commentators gave me a hard time for it. The biggest thing in January and February in terms of the resale market being weak was actually that giant snowstorm in Ontario that buried everything under 2 feet of snow on the first major sort of Sunday open house foot traffic day of the year. And then there's no listings came out that next week. So obviously you're going to have the first week of February, there's not a lot of sales happening because like those listings aren't out. And we can see that in the daily data. So I had to bring that up because I know I was given a bit of a hard time by people without data. And I was like, oh, no. I'm not going to back down. I'm going to double down. But yeah, to your point, the problem is, so what we built forever up until 25 years ago was detached housing. And then around the turn of the millennium, one of the few things in our society that we actually changed from a 20th century to a 21st century sort of idea at the right time. Well, good for us. We can't build this low density stuff as it's the 1960s, right? Fair enough. But what we switched through to was smaller and smaller apartments, initially condos, and then now purpose-built rental. And so people will come out and say, hey, we're building 250,000 units a year. And how does that compare to history? It's like, well, it might be more than 220, 25 years ago, but that was all big detached housing. And this is one bedroom apartments. And So you got this huge cohort of people that have gone from their 20s to their 30s to their 40s now, who are looking to buy a first home, who say, a 1-bedroom condo is not going to cut it. One, I need something family size. Two, I want to be a homeowner. So the fact that we're building in Canada, 40% of completions right now are purpose-built rental apartments and small ones. It's like I was trying to find an analogy. It's like we're building a whole bunch of little e-bikes and saying it's a whole bunch of units of transportation, but try taking your kid to hockey practice on one of those things, right? It's not suitable. And what is suitable is basically something that can house a family that just, what medium density means, it exists on a smaller piece of land. So a townhouse might take up the amount of land, a quarter of the amount of land that a traditional 1960s detached bungalow does, right? And so if that lot that bungalow's on is worth, not the house, just the lot itself is worth $600,000, well, then the townhome that's on a quarter of that, you're only paying for $150,000 worth of land. It's still a 3-bedroom, 2-bathroom, 1,700 square foot house. And so we've known all along that we should be building more of that stuff. We just haven't done it. In Ottawa, we actually have done a good job of building freehold townhomes. There's lots of those in Ottawa. So good news for first-time buyers in looking for something family-sized and basic to start off in. There's lots of that in Ottawa.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal.
Do you think that obviously there's been a big push for multifamily residential development and purpose-built rentals, a lot of that being pushed, and more so recently from some changes by CMHC and their construction funding program of those larger purpose-built rentals, getting into even into the MLI Select program, where qualifying and kind of that takeout becomes easier and cheaper. That obviously plays into it. But do you think that on the not building, single family homes, that a lot of that in your data is also as a result of the development costs of them? Like obviously you could put in more units into that same size of land from a profitability standpoint, but with the cost and red tape for development of single family, townhomes, single family, detached homes, whatever it may be, but on that resale side, that it's been such a laborious process for developers to get through, and the cost per unit being so high? Or do you think it's just because of the push by kind of government and CMHC on just like the purpose-built rental, that it's just cheap money in that regard?
Certainly the CMHC programs to bring back purpose-built rental have been very successful. In terms of, if success is defined as, we're building a lot of that stuff. Basically everywhere but Toronto. Toronto somehow avoided that trend. Mm-hmm. Everywhere else, like, I think I was looking at Montreal, it's like 80% of their completions or something are rental apartments at this point. It just completely overwhelming the chart in some of these cities. And I wonder to what extent, we need to make up for lost time, because we didn't really build a lot of that stuff in the 80s, 90s, and the early 2000s. So maybe we're making up for lost time. We're missing some of that stock. Unfortunately for the condo market, it kind of stepped in to become the secondary rental market in when we were building it. Now it's being just hammered by the fact that all of these new apartments you can rent are coming back out. For a lot of those condos that, for a renter looking at it and saying, do I want to rent maybe this is an individual choice. Do I want to rent from some condo investor guy who owns one, or this mom and pop, or do I want to rent in like a purpose-built building? That's one of the reasons why the condo market, I think, is going to continue to not do so well. One thing I'd point out about the condo market, though, and this is true in rental apartment space too, we often will differentiate things between rental versus condo, like ownership. I think what's really important in that space is that we're talking about apartment unit type, and there's a big difference between a one-bedroom apartment and a three-bedroom apartment. And in the 80s and 70s, especially in Ontario, you know, the median size of a condo in Toronto in the 70s and 80s, so for 2 decades, was 1,100 square feet, the median. So that's already a huge apartment. That was the median. Half of them were bigger than that. Today, the median size of a condo in Toronto is 640 square feet, which is tiny, and half of them are smaller than that. And so it's a massive change, right? They're basically half the size that they used to be. I think big apartments are a great missing middle option that would be a way to do development cheaper than to try to, do more ground-oriented development, which where are you going to put it, right? Like, our cities are filled up. That's the problem, right? So unless you want to get into the very contentious topic of massive redevelopment, I don't think we're there yet. Maybe by when I'm old and gray in my rocking chair, we might be having that conversation. I don't think people are ready for it just yet. But one of my ideas has been, buildings in existing neighborhoods. Like existing neighborhoods that are too expensive for young people to get into, that are also filled with empty nesters that are looking for downsize options. Dot these things around like we used to in the 60s and 70s. You don't put them in downtown core. These big brick buildings that stick up here, there, and everywhere with big apartments in them that either rental or ownership, that would provide both a pathway into a neighborhood like that for a young family that's never going to be able to afford a detached home in a neighborhood that's sort of in the city, and a downsize option for, empty nesters that maybe are looking for one. And one of their main criteria they always say is, I want to stay in my community. And so that's where you have to build it. And then that, of course, frees up all of the stock that's already on the ground. We don't have to build new ground-oriented stock in the ground, like in the city, because we can't. But what we can do is get some churn going for people.
Build some appropriate sizing.
And it's a reallocation of a resource that would, I think, alleviate a lot of the housing crisis we're in just by reallocating based on suitability. And so you got to understand where those sticking points at, right? It's the entry point for the young people. It's the downsize option for the empty nesters who are, emerging in big numbers for the first time ever. Because we never had, this many people that are like, hey, our kids have been gone for 40 years and we're still kicking around. And this house is kind of big. I know that the bedroom I grew up in my parents' house, has been gathering dust since 1998. And they're not going anywhere.
We, in the East End, there is 2 towers that we know of where you can still get condos, like owner, not rentals, like actual owned condos in the 300,000 to 400,000 range. And they're exactly that. They're 2 3-bedroom units. They are, 1,000 square feet to 1,200, 1,300 square feet, 2 3-bedroom units with all the amenities, gym, pool, near the highway, everything. But the condo fees are $1,000. So that's obviously an impact, but it's an older building. But that style of building, as you said, I think is like a perfect middle ground where you could, if you're a younger person and you're near the light rail and you're accessible to, the Costco and the grocery store and the, everything else you need, then I think that's a great middle ground. Something I wanted to say, Shaun, that you mentioned at the symposium, and I thought 2 things actually, I thought was really interesting. And I thought a very smart idea that doesn't currently exist was the land transfer tax credits for the boomers, I guess, or the elderly people that are downsizing, giving them a tax incentive to basically get that house into the market and churn, as you were kind of describing just now. Can you touch on that quickly? And then the last question I had was just regarding job losses in Ottawa, because that's a conversation that we have all the time. People fearful of the kind of impending, waiting for that foot to drop or the boot to drop that, they're going to lose their job in Ottawa here. So can you touch on both things? First, the land transfer tax credits that you were discussing, and then kind of the misnomer, I guess, of job losses here in Ottawa.
Yeah, sure. So on the first one, I mean, that was just me sort of spitballing at that point. This is not an official position, but we have, that's what we have to do here in this advocacy department, to sort of try to work through these issues. And we have meetings with other outside people and just throw ideas around and sort of, and then criticize them and beat them up and see if they withstand scrutiny. And that's one of the ones that I was thinking, look, we give land transfer tax credit to first-time buyers, and because we think that makes sense. If there's one of the things I was, sort of looking at what, people that are saying we feel overhoused, but it's easy to stay where we are. There's not a lot of great options, especially in my community. So it's not close to the grocery store. It's close to my grocery store, right? For them, but also that it's like, well, moving's a hassle. You do it when you have to, like you want to get your first home. You do it if you got to get a bigger home, but it's like, we're good. This thing's paid off. Like, this is kind of a hassle and it costs a lot of money. Well, maybe that giving that tax break would be a way to sort of ease that transition. Say, hey, this makes it a little bit easier. So we're going to build something that's a good option for you to downsize to, and then we're going to rebate the land transfer tax. And then, of course, whoever buys their $1 million house that they sell that wouldn't otherwise be for sale is going to pay land transfer on that. And so I think you could probably do a study with some firm, outside firm that could show that that municipalities would actually raise more tax revenue, or not municipalities in Toronto, I guess, in Vancouver, but our provinces would raise more land transfer revenue if you just got the market churning more and people moving around more that want to get unstuck from where they are. And then that also solves a lot of the problem of suitability. People not feeling like they're not in a suitable place. People that feel overhoused over here. People that are like, I can't have a kid in a 1-bedroom apartment over here. I think that you could solve a lot of things with an idea like that, potentially. One of the other big things that's solving that, one of the other main problems for that group is things like diamond storage, like VIP self-storage. One of the biggest impediments to people downsizing home is that, you go up and up and up and you fill that thing with stuff. And then you say, what are we going to do with all this? So I think there you go. Build the right kind of unit in the right place. Give people an incentive to downsize to it if that's what they want to do, and have a nice VIP self storage for them to put their stuff in.
Do you think that the kind of on that thought about land transfer tax credits, because in the GTA we don't have it here in Ottawa, but the GTA basically has a double taxation on land transfer, with their sales being as low as they are. In the dozens of units being sold in the GTA, which is absurd. I think it was like 58 units sold in January. Do you think that is there any talk of eliminating the Toronto or the GTA land transfer tax in order to increase that churn? Or do you think that would be an incentive enough for added churn in that market?
It would definitely be. I haven't heard anything about that, but yeah, the people have been complaining about that forever. And from a policy perspective, it's this whole idea that it's like, let's just try to extract another multiple tens of thousands of dollars out of these people, and they won't even change their behavior. They'll just pay it. And so certainly, making it less expensive for people to be able to move around that way does create more churn. And if that is something you want to do in order to solve some of this housing crisis, just the easiest way, the lowest hanging fruit is reallocation of the existing stock. It's a lot easier than building entire neighborhoods inside cities that are already filled up, right? So I think that that's something they might want to look at. And I think that there's an argument to be made that by reducing it in certain key areas, you might increase your revenue take on that overall. And I guess the other part of that question, Paul, remind me, what was the second part of that?
Around Ottawa's government employment situation.
Jobs.
Right. So we've done a lot of work on that, even historically, but more recently too, because we get that question all the time. Where within the historical record that we can compare to the housing market, you've got two historical comparisons to what we're going through now, right? There's the Chrétien Martin ones of the mid 90s, and there's the Flaherty Harper ones of the early 2010s. And so the Chrétien cuts in the 90s was like a machete through the jungle, right? They hacked and like to the bone in a lot of cases. But it did impact the market. Like, the market just went quiet, no sales, way down, but it was short-lived, and then it rebounded because they sort of got it out of the way and ripped that Band-Aid off. And the point I've been making is it's not so much the impact on individuals' employment that affects the market. It's in advance of that, the confidence of so many more people who say, I might be one of the ones affected here. And so I'm not going to go out and buy a house, obviously, right?
Right.
And so what was interesting was in the Harper cuts, which were the most mild of compared to now or compared to the 90s by far. But it was big, mean Stephen Harper from Alberta coming after, unionized employees in Ottawa. And I know because my family and friends in the public service, and it was perceived as like, oh, big bad Harper is coming to take our jobs. And because there never was a big Band-Aid to be ripped off, there never was any major cuts under Harper, I think a lot of people always felt that it was out there on the horizon somewhere, that it was going to be that next shoe to fall. And so the market actually went dark for like 5 years or maybe 4 years under those cuts, even though those were not severe at all. But there was always the fear of that. And so how that compares to the cuts now, a lot of the, I wouldn't say cuts, but reductions in employment in the public service in Ottawa have already happened in 2025. Major drop. We looked at the data the first time to see how much of it had already happened. And we were like, has it all happened already?
Mm-hmm.
The thing is, so far, that's not been pink slips. That's been a lot of early retirement and packages. So people sort of they were not walking out the door, in tears, but walking out the door, cheering and saying, I'm never going to have to get on that O train ever again. I'm moving to Perth kind of thing. So that's been phase so far. I think they're moving into the phase now where the remaining, to the extent that there's remaining numbers to get down to a certain threshold that they want to get to. But I think that that's going to be fairly minimal at this point. They've done a lot of it sort of with a pension fund and surplus. They've done a lot of it through packages and early retirement. So again, it's a different vibe. Living in the city, I can tell you, compared to the Harper cuts, I don't feel that vibe in the city. I just don't. And I don't see the impact on the market to the extent that, like the Ottawa housing market has been sort of creeping higher over the last 2 years, right? Not majorly, but it's not Toronto. And you don't see that was massively derailed in 2025. Sales and the average price were up in 2025 in Ottawa.
Do you think that that kind of contrasts to Harper days of kind of this dark cloud that it may happen, whereas, kind of slowed the market down or kind of really reduced sales dramatically versus right now where it's actually that Band-Aid's being ripped, that there's not that kind of dark cloud fear. Like obviously for a number of people, they're getting packaged, like you said, early retirement. Others, there's a smaller subset that are kind of being, forced into here, packaged out. Now you still have to go find something else, but that's a smaller amount as opposed to kind of this is going to be dragged on and we don't know how it's going to be rolled out. That kind of, like you said, that 2025 numbers have already, the predominant portion has happened so that it's not this dark cloud. Because I felt like last year as well, and at the beginning of the show, when you said kind of that black swan event in 5 days, if they announced a 25% tariff, that I felt like that was a dark cloud over the housing market last year, that people were in every sector unsure of what their job security was going to be. And that kind of slowed things down. Whereas at least on this federal side, it's like the cuts have been happened, they've rolled into retirement, or they're getting massively packaged. And in some cases, they're just getting packaged out and going right back to consulting, which doesn't play into the employment numbers for the federal government. But do you think that's kind of playing into it a bit?
Yeah, definitely a different vibe this time around. And so they've got another couple of years worth of these cuts to sort of like to get through to the sort of the end point that they want to get to. Don't forget that it's on balance, right? Because they're hiring in defense like crazy. So again, for the Ottawa housing market, if you're near where I am in the West End, you might do better. If you've got defense executive types looking to move to Ottawa from other parts of Canada. But I don't feel like there's that same dark cloud that there was in the previous rounds of cuts. Just that vibe isn't there. But it's, of course, now been replaced by a different dark cloud, on the other side of the world, and how that's going to play out. And that one's still very in early days. We don't have no clue, but it could be really bad, right? If it drags on.
I heard, go ahead, sorry.
I was just going to say, it's, every new big thing that happens sort of tries to squish the importance of some of the stuff that we thought was a big deal in the past, and so I feel like we're sort of in that situation now.
Yeah, like all of these things internationally in the US and obviously here at home impact our whole market, right? Now there's obviously niches in different subsects like Toronto and Vancouver and so on, but Ottawa is kind of right in the middle. Like you look at the national averages, we kind of talked about this last week when we were chatting, but you look at the national averages and Ottawa is almost always like just right in the middle, like right on average with the country. So I think that's good for us in the sense that we at least can kind of keep our finger on the pulse as to what's happening nationally, although there is going to be obviously nuance to that. But, Shaun, you have obviously an inside edge over us even, and definitely over the general public. And I think there's kind of this lagging indicator in the public where, they're kind of hearing what's happening 3 to 6 months after that ship's left port. So we're kind of trying to just keep people as informed as possible week to week. And I think it'd be really valuable if you're open to it, having you on, once a quarter or at least couple times a year just to kind of give people that further insight than what we're bringing them on a weekly basis.
Yeah, sure. That's where you get more into the Ottawa specific stuff. I feel like this was a good intro to some of the things that are out there, but we don't need to discuss this every quarter. These are long-term problems that we're sort of looking to solve for. But what's Ottawa going to do next month? That's another thing that we could get into next time. I think I would keep an eye for, we're what are we now? End of March, right? How did that happen?
Yeah, crazy.
I feel like I'm just starting my year, but this is the time of the year to look for if something's going to happen. If people are going to start to jump into the market, it's going to be soon. One thing I can tell you that will happen in the national numbers and the Ontario numbers next month is that big snowstorm, since it took a big bite out of the end of January and the beginning of February, both the February and January numbers were depressed. That's going to be over in March. There's actually a bit of a slingshot effect of stuff that didn't happen in February is now seems to be happening like up year over year on a year-over-year basis in March. So I think already you're going to get numbers that are headline numbers that are going to be like, oh, the Canadian housing market's springing to life. Is this that recovery that we've been waiting for? And really, I think that's just a level set back to not snowstorm. And I think that actually the headwinds are starting to blow a little bit stronger here, especially to your point. My story about mortgage rates going from 3.99 to 4.04 was from a week ago. And that's already ancient history. Right?
Yeah.
And so I'd calculated that as being maybe like a regular Starbucks, like not the kind my daughter gets, but like, the $5 kind a week. And I'm going to have to recalculate now if we're at 4.29, because that's a big difference, So,
yeah. I mean, really that's in 1 week, we're up 40 basis points on fixed rates, 5-year fixed rates, and on conventional without any sort of discretion from an institution. One of them raised last night, or I think it's tomorrow as well. Another big bank, and it's jumping that full 40 basis points on their conventional rates into the mid to higher fours. Kind of in that 4.54 to 4.74. So it's it is jumping back up. It will certainly have a big play in things. And, to your point, it is kind of a month over month situation too with, if this does, we saw it on Monday going into right before the markets opened of, a post by neighbors to the south that, things, positive talks. And we saw the market yesterday kind of bounce back and bonds come down and then, back right up because there's bombing overnight and they're back up again. So I think it'll be interesting to your point, throughout is if this conflict does end rather soon, how does that oil market react? How does the equities market react? How does the bond market react? And do we see a big drop in those back to even where we were 2 weeks ago, where now there's a 3, suddenly there's, starts to be within a month's time, 3's in front of the number, that fixed number. Do we, is that the catalyst for those first time home buyers or those buyers on the sidelines saying, we kept checking in with our institution. We saw rates jump up in the mid 4s and now they're back to, a 3 in front of it. Like, let's get on it kind of thing. So I think it will be really interesting to see over the coming weeks, because I don't think this conflict can drag out too long based on how the global economy is going to suffer.
Let's also not forget too that like 2 springs ago, I think it was 2 springs ago, 2024, rates were in the 5s, like mid 5s, right? Was that 2024 or 2023? I don't know. Years are all conflated.
High 5s.
Like the fact that rates were like 5.89, 5.69. So now even like 4.39 looks like a absolute massive sale. Like we're 25% off from where we were 2 years ago, so it's all relative. And Shaun, I just wanted to touch quickly on your point about the weather and like just like spring. Like we felt that one weekend where we had 15-degree weather here in Ottawa, 20-degree weather, and it was sunny, clocks went ahead, that day. I know everyone I spoke to, Dave and myself included, we got flooded with APSs. Like people just went out that one day and bought houses. It's like almost guaranteed that when there's warmer weather, the birds are chirping, people are out thinking, what are we going to do this summer? Let's go buy a house. That's kind of like, and to your point, it's that slingshot. I'm expecting this is the calm before the storm. We had that big buzz for like a week there. It's kind of stagnating now. A lot of renewal conversations now leading into the spring, but those home buyers are still there. And I can almost assure you, as soon as we get above, 10 degrees for 3 days, we're going to feel it, and we're going to have that big influx. So that's it, everyone. We do end the show typically, Shaun, with some mood boosts, just some dad jokes to kind of lighten the mood. Typically, our conversations are a bit heavy, as you can tell, with talking about people's finances and so on. So I have 3 today, and you guys can tell me what you think of them. Number 1, a bartender broke up with her boyfriend, but he kept asking her for another shot. Number 2, scientists have discovered what is believed to be the world's largest bed sheet. More on this story as it unfolds. And last but not least, my wife is really mad that I have no sense of direction. So I packed up my stuff and write.
I don't have one of those trumpets with the thing to go, wah, wah.
Yeah.
Oh yeah, we have it.
Yeah. I'm never impressed, Shaun. It's very rare. It's I always cringe at basically all of them.
You guys, can I tell a joke?
Hey, go for it.
Absolutely.
All right. So this is sort of a math joke. So you got a chemist, a physicist, and an economist go deer hunting. Maybe you heard this one. And they're creeping along through the forest, and they spot this deer. And so the chemist says, "Here, give me that rifle. Give me the first shot." And he aims, bang, misses 5 feet to the left. And so the physicist grabs the rifle, says, "Give me that." And he aims, takes careful aim, boom, misses 5 feet to the right. And the economist says, "Hey, we got him."
Fitting.
Thank you so much, Shaun, for your time and for shedding some insights into what's happening, not only just in Ottawa, but across the country. And we'd love to have you back on. And thank you to everyone for tuning in. Shaun, where can people find you if they want to kind of follow along with your journey and your updates?
So we do a video every month on Korea.ca. It's right there front and center, and it links through to our news release. We also have a ton of data that you can download for free on home prices from our website. And there's even more data available for a small fee. So we make all of our stuff available. I'm the only Shaun at Korea. So you know where to find me. And thanks a lot for the opportunity. I just want to end by saying we're sticking to our forecast. We think this is going to be a somewhat of a recovery year. First time home buyers coming back in. They always say, don't change your story until the data massively have proven you wrong. And we're not even in April yet. And the other thing I'd say about rates is right now, the movement in rates is based on stuff that the Bank of Canada might do, not stuff that they are doing. And so this can all turn around very quickly if we wake up tomorrow and it was all a dream, or if it ends, quickly. So cross fingers.
Thanks a lot, Shaun. Thanks so much for coming on. It's been, it's great. We're looking forward to kind of diving into Ottawa numbers in future episodes.
Thanks for tuning in, everyone. Be sure to check out our socials, and we will be back next Wednesday, 10 a.m. Thanks for tuning in. We'll see you soon.